We have a question here from Kerrick, who says that currently he doesn't really have a set entry style or technical analysis method or strategy that he uses to enter and exit trades. He simply enters at market in line with the sentiment, but he feels that it is a little bit unorganized for him, and he wants some advice on this. So thanks for the question, Kerrick. Now, when it comes to technical systems or technical entries and exit strategies, the sky is really the limit on what you can choose. It can range from very simple to very complicated. And when it comes to the technicals, we prefer to keep things as simple as possible, but obviously not too simple. Now, there's a huge array of technical tools that you can use. The ones that we use on a daily basis is the ones that you've seen us use in the videos. It's really basic stuff. It's just basic support and resistance, psychological price levels. Looking at that on the chart, here's a clean euro US dollar chart. So if we just zoom out a little bit, just from an intraday perspective, support and resistance, we have a nice little support and resistance area. So that's going to be a key area for us to focus. We have that high going back from yesterday. So that's going to be a key support and resistance area to focus on. And, if we scroll or zoom out a bit, we can see this overall area is also going to be important from support. We have these prior resistance areas coming back. So that's also a nice area of confluence. And now we can add in your psychological price levels, so add in your 114, your 115, your 113, and see if you have some confluence with some of these levels, maybe even the 112.50. That's a good example, 114. So, basic things that we use to look for some confluence. Not only, of course, on the shorter time frames, but, if we just quickly pop up to, let's say, the daily and look for some other areas there of interest. We know we have that high marked out already at 115. Then we can maybe put in that high from the open and the close of these candles. And then we also have that overall close and area on the chart. And if we just go back, we can just see how nice these levels all match up with the minor levels that we've already marked out on the chart. So basic stuff to use here. As you've seen from the videos, apart from just support and resistance, apart from psychological price levels, we also like to use things like the ADR as well as the pivots. ADR and the pivot's really great because it gives you that intraday volatility areas to look for more confluence. So, we marked out this area as a support and resistance area. We have confluence there from a higher time frame with a support level, and we have the S1 and we have the ADR. So this overall area that we have over here, we know there's a whole range of confluence here. That should act as support. So that's going to be a very important level for us on the chart. And if you have an upside bias, for example, but you're waiting for a pullback to enter, then that's going to be an obvious area for you to consider to take a long on this trade. So, the sky is really the limit. You can add in things like a moving average to help you out with this. Some traders add in things like RSIs and MACD indicators, etc. I used some of those things many moons ago, but I didn't find a lot of value in them. But there's thousands of traders out there that swear by it and that trade with those type of indicators on a daily basis. It really comes down to what you prefer and what works best with your trading style. So for us, it's really the simplest stuff out there: support and resistance, using pivots, using ADRs, using psychological price levels. If it's a normal day trade, I'm never going to look to buy at the high or sell at the low. If I'm looking to buy this market, I'm going to find those areas of confluence on the charts, and I'm going to take an entry from that. So if it's on this chart, for example, a first possible area can be this minor support and resistance area coming in at the daily pivot. And then obviously below that, you can look for this possible area for some entries. And then in the targets, again, you're going to use your same tools to find possible exit locations like the R1. We have that high from yesterday. We have that higher time frame level as well. So key area here of confluence to the upside for a potential target as well. So really simple stuff. Nothing, no secret sauce when it comes to finding these types of entries. When it comes to unscheduled or unplanned news, sometimes you might have an instrument where you don't have all of the levels marked out on. And that is why I really like something like the daily pivot points when it comes to intraday, unexpected, short-term sentiment bursts that you get in the market. Those fast money moves to the up or to the downside. I normally just use the S1 and the R1 or the daily pivot, depending on where we are, of course, for quick targets to the up and to the downside. So currently we're trading on the euro dollar. Now we know that the EU recovery fund, for example, is a big deal right now, right? And we know that the EU summit is coming up over the weekend. So imagine we're sitting here and suddenly you hear an announcement that the Frugal Four member states, they are so dissatisfied with the EU recovery fund proposal, they're not even going to show up for the meeting this weekend. That's going to be a very quick sell on the euro if you hear news like that. So at these current price levels, you can basically have two target areas. You can take off a first unit at this pivot, and then you can take off a second one at that pivot. Now, evidently, it matches up nicely with this overall support and resistance structure as well, but it just gives you a nice area, a quick target to use in terms of short-term support and resistance. Now, obviously, if you're already past your R1 or your S1, you can always add in your S2 and your R2 as well. Great from just a pure intraday perspective point of view. And apart from that, you can also add in like the ADR. So the ADR is normally going to be based on a little bit of a deeper look back. So the pivots we use obviously from yesterday's volatility. For the ADR, you can use anything from 2 weeks to a month. So 2 weeks trading days would be 10. A month worth of trading days would be 21. And that'll give you basically a month worth. So over the last month, this is going to be your average daily range or volatility range for the euro dollar. And that also gives you some nice entry and exit targets to work from. So again, there's really no secret sauce, Kerrick. And the one thing that I would say, is that currently, if you're trading and you're trading successfully without, using any of these things, if you're just entering at market with sentiment shifts and taking it off at key levels or whatever you use, if it's working for you, you don't force yourself to use a whole bunch of technical indicators if they're not useful for you. So try out some of these things. See if there's any of these methods that helps you out and that gives you a little bit more structure or give you a little bit more of an organized way, like you say. For me, the only time that I enter at market is when there's a massive sentiment shift, and I just know that it's going to move up or down, and I'll just jump in. And then I'll just use the pivots. If it's a normal day trade and I have an upside bias, I'll obviously want some to enter at a pullback, and then you can mark out those levels and build yourself a little bit of an entry and exit strategy. But my only advice with this is keep it as simple as you can, and don't force yourself to use things if they're not useful for you. If you can trade without it, then by all means, you're more than welcome to do so. But don't force yourself to use methods that doesn't make sense or basically takes away from your trading success at the end of the day. So it really is very subjective on what fits best with your particular trading style. So I hope that helps, Kerrick. Any other questions, please don't hesitate to let us know.